Hello and welcome to CMC Markets on Thursday, the 31st of October, and my weekly catch-up with the premium client sales trading desks who've actually decided to join me this week. Welcome, Jamie. I see we're very nicely colour coordinated here in pink shirts. Hopefully we can be as exuberant about the markets this week. And we're going to be talking about a variety of issues this week, namely the FOMC and the surprisingly less than dovish outlook that they painted for the US economy, the mixed US economic data out of the US and Europe this week. We're also going to have a quick look at Facebook shares as well, have a look at euro dollar, maybe look at cable as well, and look at what our clients are doing in respect of those major currency pairs and some of the expectations for next week. Let's start with the FOMC last night. Now, we've seen record highs this week on the S&P 500. Not quite, I think we've also seen them on the Dow Jones, but last night's FOMC statement has sort of caught a few people off guard because it probably wasn't as dovish as markets had been anticipating. What's our clients' take on that?
Well, I mean, I stayed last night for the meeting, just to see with any reaction of clients and so on, and as I think everyone assumed that there would be no change to the quantitative easing, but as I think the devil was in the detail. Less than dovish as maybe is expected. It would still be very data driven how they review the quantitative easing and so on. But as I say, I think some of the tone of the conversation caught the market offside.
Yeah, I think they expected a much more dovish tone given the government shutdown, and they didn't get it.
And probably with the numbers we've seen over the last few months, I think that's probably right to expect anyway. Non-farms were not as good as the ADP numbers we've seen recently as well. So if anything, that probably underlines what people's expectations were. And as I say, so that statement probably was a bit of a curveball, or the detail in the conversation. Sorry.
Absolutely, and I think this afternoon's Chicago PMI sort of really bears that out because we were expecting a number of 55.7 for October and we got 65.9. Sure. So even if the government shut down, Chicago didn't.
And I think that's been reflected today, where we're seeing the Dow going, exactly. So we've seen a bit of a pullback there. But I would still expect, and I'm probably speaking to you off camera, I think you're probably that way inclined as well, that you would still expect to see a Christmas, a rally, equity rally going into the end of the year anyway.
So, yeah, I think, a bit of a pullback because I think we're well overdue that. Yeah. We're getting a bit of a dollar bounce as well, and I think that's being reflected in this euro dollar chart here. We've managed to pull back, and this is a weekly chart that we're looking at here. And there's a possibility we could be getting a bearish engulfing week. Yeah. And our clients a week ago were about 90% short euros. So if we change this to what our client sentiment is now.
Well, as I say, so we've gone from 90 or down to around 63, and I think that people going into the last few weeks have probably been at a bit of a rough ride in relation to euro dollar.
A bit of squeeze.
Exactly, and I think it was due a bit of a sell-off anyway. And I think why we're seeing the client sentiment change is people have just took some risk off the table and banked some profit.
So looking to probably maybe sell into the rallies a little bit, especially when you see that unemployment data that we saw this morning, sort of all-time highs for Italian and EU unemployment. Exactly. Makes the prospect of an ECB rate cut all the more likely, or maybe another LTRO?
I wouldn't be shocked if the ECB did cut rates, but I don't think it'd be this side of the new year anyway. I think they still want to give themselves some wiggle room, if need be, and I think and if they jump too soon, I think that there's nowhere to go. So I think they will, bite the bullet and see what happens in the new year.
I think also there's the perception that maybe people are starting to think about a December taper, but I still think that's a remote possibility. I still think that we're looking March 2014. We've got non-farm payrolls next week. Next Friday, they've been pushed back. We do have US GDP next week as well. So, I think maybe we're getting a bit of a dollar bounce, but I still think.
But I mean, I like you said, I don't think they'll do it in December. I think Yellen's taken over in January. No one wants to be left with a hot potato, so I think we'll leave things be and then see where she wants to go with that. But
we've got to go through it all again in January and February anyway. So,
exactly, and then obviously you've got the debt ceiling in soon after as well. So
yeah, absolutely. Let's talk about cable. I think it's been a similar sort of story with cable, but we're carving out. This looks like a classic double top, but cable has been a lot more resilient than the euro today. It's held up fairly well. Euro sterling's dropped sharply. I think a lot of our clients were getting squeezed on that as well. But if you look at the client sentiment on cable, it's a similar sort of story. The only difference is we haven't had the drop, and I think that really accounts for the fact that we're 83% sure.
Yeah, exactly. And as I say, I think the numbers we've seen for the last few months at the UK have been pretty encouraging anyway. They're all going the right direction.
Not worried about a housing bubble or anything like that?
Apparently if you live in London you're okay, but outside London, but as I say, I think you've always got the danger with cheap money, you create a false economy, and unfortunately when things go up there's only one way down eventually, isn't it?
Well, yeah, exactly, and I think that's sort of, I think that's the perception that, we've got here at the moment, the concerns about, cheap money fueling a property bubble within London, but outside London.
Does that sound familiar from the US a few years ago then?
Yeah, it does a bit. It does a bit. Okay, let's talk about Facebook, because Facebook was very, very choppy overnight.
Yeah.
It is up today, but it opened lower, and I think in after hours trading it spiked to 57, 58.
I think it was just shy of 58 or around 58. As I say, earnings were around 60% up.
Yeah, 60% up. But I think there was a key line that really spooked the markets, and that was the fact that fickle teens.
Yeah, apparently it's not cool to use Facebook anymore if your mum and dad are. So I think that that probably put a bit of a damper on it, and hence then after seeing that spike, we then see a pullback, hence opening lower today. But overall it's still looking. Bear in mind where we was, at launch and so on. I think
we were at 42 at launch. We went down to 18, and I was one of those. I'm a Facebook skeptic. I think mobile advertising, and you look at this here. We were down here around about 26, and then we had a massive jump. So, since July, we've gone from 26 to $52. And really the question is, or $50, how much of it is already priced in? Is it a bit rich up here? Well, let's see what our clients think. They're all long, 84% long. It's down 3% today. So, there's certainly more potential.
But I think people have been, long for quite a while on this anyway. I think, as I say, probably got caught offside when it went to launch, and as you say, then we had the dips, to the low levels, and since then it's been an upward trend. Now people have rode the trend out really on this. I suppose obviously with Twitter going next week as well, that would be something definitely of interest as well. Yeah,
tech stocks. The Twitter IPO, that should be particularly interesting, certainly worth keeping an eye on. Okay, well, thanks, Jamie.
No problem.
That's it for this week. Once again, thanks very much for listening. I won't be doing it next week. One of my colleagues will be doing it, but I will see you all again in maybe 2 to 3 weeks' time. As for this week, thanks very much for listening. Have a great weekend.